What's happening, everybody, to the exam breakdown? Today is Wednesday, March 19th, 2025. Holy smokes, man. March is like going fast. It's like a vortex. It's just fast. Everything's happening very fast. Good to be here with you all. Hope you're all doing well. My name is D. Kumar. It is a pleasure to be hanging with you. The goal of these exam breakdowns, we look at the essential pieces that are relevant to examinations. And I've been teaching folks for a long time, 25 years. And, in that time, I have had the blessing of hanging out with, tens of thousands of folks, live, virtual, streaming, hybrid, all of that stuff. And I'm pretty good. I guess one of my superpowers is the ability to be able to ingest material once I make it a part of my DNA, to be able to explain that content using various methodologies, whatever it takes, scenarios. That's sort of my goal and objective. So however you learn, what I have the ability to do many times is just be able to figure that out and be able to disseminate that information. So that's one of the things that I do well. I also have a really, really, really decent knack for understanding what things are going to show up on examinations and what things are not. And what I'm doing for you here is today we go over the Mortgage Loan Originators Licensing Examination. And this is for all of my friends all over the United States. This works everywhere, anywhere, all the time for that particular examination. Now, in today's topic and discussion, what I want to do is I want to cover a couple of the most popular acronyms that you see, or initialisms that you see on this examination, and kind of give you that breakdown. So this is just a good starting point to come up with a list of these to be able to kind of go through and utilize them. You're going to see all of these on this examination in some way, shape, or form. And obviously doing a little bit of a deeper dive into these is going to be beneficial. So you definitely want to do that. Hope you're doing well. I'm just going to look over my shoulder, make sure everything looks okay. Sometimes I'm like super white. Like I look sickly. Gotta put on some stuff. And I'm sorry about being a few minutes late. I will be honest with you. I will tell you what I was doing. I'm like, man, I really want a tea, and I love green tea. I love Japanese ceremonial matcha when I can get it. That's what's up, right? So like that's what I do. And I was like, man, I'm gonna run up and get one real quick. And then I did, and then so there you go. Anyway, I'm a work in progress, as everybody tells me. All right, here we go. Let's get into this. I want to talk about these acronyms. Now, at the end of this, I want to give sort of a shout out to something that we've been developing, and we're about to drop this for the real estate folks, and it's an amazing platform masterclass kind of opportunity. It's been, to my understanding, obviously I watch, and this channel is growing, and thank you very much. If you haven't subscribed, please consider doing it. If you're a subscriber and you're watching this content, thank you all very much. Things are going excellent. We're seeing tons of folks pass, and I've been getting a lot of requests for more mortgage content. And obviously you can leave that in the description. But what we're building for you is a streamlined, the Cadillac version of trying to get through this examination. And if something like that interests you, leave that in the comments, because it is under development. And, I'm curious to see if folks out there are looking for that we can help serve. So I'm going to give you a demo of what we built for the real estate folks. This thing is awesome. And then if you like it and you would like something similar, let me know, and we'll start working on fashioning this thing custom made for you mortgage originators. All right, let's get into this. So first off, these acronyms or initialisms are things that you see through and throughout the exam, in your course materials, and everything else. So the scenario that I'm seeing right now is many of you guys are out there, you're all studying, you're all trying to get past this examination. It's a challenging examination. One of those exams that if you happen to fail, you have to wait 30 days to take it again. And if you fail again, then you're gonna have to wait 30 days to take it again. And if you fail a third time, that third failed attempt, then you have to wait 6 months to take this exam again. So there's a lot of folks in that vortex, in that spiral. And so here I am to try to help you out. Truth in Lending Act, or TILA. TILA is the letters, and it stands for the Truth in Lending Act. I'm just going to give you a quick overview of what these things are. I'm just going to bring this up just a little bit. The Truth in Lending Act is a federal law that requires lenders to disclose important loan terms, including interest rates, annual percentage rates, total loan costs, payment schedules, before the borrower signs a mortgage agreement. TILA helps to ensure that consumers can compare loan offers fairly and protects them from unfair lending practices, such as hidden fees and bait and switch tactics. Bait and switch is a vocab phrase you definitely want to know. You want to know a few things about the Truth in Lending Act. There are several things. One of the things is regulation. Z as implemented by Reg Z, so definitely they'll use these phrases interchangeably many times. I also want you to know that if the annual percentage rate is being disclosed and there is nothing else in the advertisement, then that is absolutely okay. It's the only exception to the rule. You want to know what annual percentage rate is, you want to know what finance charges are, and you want to understand some of this, and this is a massive consumer protection law, by the way. So, inside of it, for example, is HOEPA, higher cost loans, and all kinds of different things. So you want to know about this a little bit. It's an important law, and the acronym TILA stands for the Truth in Lending Act. The next one is RESPA. RESPA stands for the Real Estate Settlement Procedures Act. There's all of these end with like A, by the way, and A stands for Act. RESPA regulates the home loan closing process. And so if you were going to what is RESPA? This is what it is. It regulates the home loan closing process. And it requires lenders to provide clear and upfront disclosures about fees, settlement costs, and escrow account practices. RESPA also prohibits illegal kickbacks. What is a kickback? A kickback is when you pay someone for the referral of business to you. So in service industries, people offer kickbacks. Hey, send me some business and I'll give you some coin back, right? So that's what a kickback is. RESPA prohibits that. Unearned kickbacks. So there are illegal kickbacks, and then there are legal ways to kick back funds. Legal kickbacks are in, the terms of affiliated business arrangements, AFBA. That's another initialism that you sometimes will see on the exam. So I'm sorry, I just looked at I only look at my text when I'm making sure there's nothing up with the children at school or whatever. And so this morning I'll just share with you really quick. My daughter fell. She's been learning how to ice skate. She loves it. She's really good at it. But she took a bad one yesterday. She was on a different ring, and she just got her skates sharpened and stuff. So she fell pretty bad, and she banged her hip, and it bruised up pretty good. And so it hurt a little bit. And so this morning she's got allergies, so it's allergy season. So my job is to give here's your allergy meds. So I'm giving her allergy meds. And sometimes I act like a novice, but I've been doing this for a while, right? But so I wanted to give her some Tylenol because of the pain. I was a little unsure about mixing Tylenol and her allergy medication. So I just told her, and my wife told her, actually, is, baby, the allergy meds are going to take away some of that pain for you. Don't worry about it. The stuff that daddy gave you is going to take care of that too, just to kind of put it in her head. And then she could take Tylenol later at the nurse's office or whatever if she really needed it. Anyway, she looks at me and she's like, Dad, that's for allergies. And it doesn't fix pains and stuff. So basically, Dad, you're a moron. So RESPA is another one of those that you definitely want to know. And so with RESPA, you want to know that it's also Regulation X. You want to know what illegal kickbacks are. You want to know when kickbacks are legal with affiliated business arrangements. You want to know that the consumer, and the point of RESPA is so that the consumer is not overcharged for services during the real estate transaction. I mean, really, if you think about it, with all of the different service providers, appraisers and title companies and title attorneys and all of this stuff, you need to just make sure that you understand that it's very easy to increase charges for these transactions. I mean, really, how do you know? There's no set standard fees in the industry. We can charge whatever we want to. If you call any service provider, they can charge whatever they want to. So unearned fees for closing and settlement services are regulated under RESPA. The next one is ECOA, the Equal Credit Opportunity Act, another consumer protection law. And it ensures that lenders cannot discriminate against applicants based on race, color, religion, national origin, sex, marital status, age, or the receipt of public assistance. You should memorize the protected classes. And then the other anti-discrimination law in housing is the Fair Housing Act. So between the two, we have the Fair Housing Act, and then we have the ECOA. I'm just looking over my shoulder. We're good. And sort of between these two, that's where you see these things, and sort of that's how it works. Okay, so you want to know this law guarantees that all borrowers have a fair opportunity to obtain credit as long as they meet financial qualifications. Now, the ECOA lives under Reg B. An easy way to remember this one is B for bigot. A bigoted person is somebody that is discriminatory, and ECOA is a law that prohibits discrimination. Lenders cannot discriminate based on certain protected classes. Other things that you want to know about ECOA is where we're gathering this information, how this whole thing ties together, the adverse action letters that have to be given to consumers if they are denied credit. They have to be told why they are being denied, kind of thing. And then there's a little bit of a tie-in with appraisals and appraisal reporting when it comes to ECOA as well. The next one is HMDA, HMDA. Stands for the Home Mortgage Disclosure Act, HMDA. Now, HMDA lives inside of Reg C. The Home Mortgage Disclosure Act requires lenders to collect and report specific mortgage loan data to the government. This data is used to monitor lending patterns and detect discriminatory practices such as redlining. I will bet you that's a phrase that you will see. Now, redlining is not making a loan in an area for reasons other than economic qualification. So if you're not economically qualified, and a lender denies you, well, that's okay. Excuse me. And if you are economically qualified and you are denied, then the lender needs to tell you why per the Equal Credit Opportunity Act. But gathering HMDA data is going to identify patterns of practice, pervasive discriminatory practices in an area. And that's what gathering this data does. Now, where certain communities are unfairly denied access to mortgage loans based on demographics rather than financial qualifications. The HMDA data is collected on the 1003, which is the Fannie Mae, loan application. Now, you can remember the letter C. That's the third letter of the alphabet. The 1003, letter C, 1003, that's where we collect it. It's gathering information. If you look at a loan application, you will see there is a government monitoring purposes section of that federal application. And it's like, I do not wish to furnish this information. What is your race? What is your national origin? It's asking you, how do you identify? And so it's asking you those specific questions. And those are the questions that that they're gathering to determine if applicants are being discriminated against. The next one is HOEPA, H-O-E-P-A. Stands for the Home Ownership and Equity Protection Act. This law lives inside of TILA. TILA is enormous. And so inside of the belly of TILA is HOEPA. Now, HOEPA is also, AKA, also known as a Section 32 loan. So you want to know that sometimes it's used interchangeably, Section 32 and HOEPA. All right, so the Homeownership and Equity Protection Act was created to protect consumers from predatory lending practices, particularly on high-cost home loans. So there are three categories of loans. One is high-cost loans, one is higher-cost loans, and then one is prime loans. And so a higher cost loan could be a prime borrower with the jumbo mortgage, and they're going to pay more because the fees are commensurate with the percentage of the overall loan amount, right? So the bigger the loan amount, the bigger the fees, which is why, loan officers want to originate a $5 million loan versus a $50,000 loan because of the pay scale structuring. Lenders must provide additional disclosures and follow strict guidelines when offering loans that exceed specific APR and fee thresholds. You want to memorize these APR and fee thresholds. So in other words, what constitutes a high-cost loan? So it's going to be if the APR exceeds the APOR, and you're going to look it up in your books, I'm not going to go over it here, but there is definitely that trigger. For first mortgages, it's when the APR exceeds the APOR by 6.5%. For second mortgages, it's 8.5%. So you kind of want to know what APOR is, the average prime offered rate, and you want to know what APR is. Again, back to that with TILA and what are finance charges to understand what are high-cost loans. And it's to avoid the logic of predatory lending. Now, we're trying to ensure borrowers are not trapped in loans with excessive interest rates or unfair terms. So that's what HOEPA loans are. HOEPA is the Homeownership and Equity Protection Act, and it addresses predatory lending. It lives in the belly of Truth in Lending Act. SAFE. All right, SAFE is definitely, you're doing these courses because of the SAFE Act. Okay, so SAFE is something that I would pretty much be willing to put money on. Like, again, I don't have a copy of your examination, but I have a good targeting system, right? So don't forget that. But SAFE stands for the Secure and Fair Enforcement for Mortgage Licensing Act. The SAFE Act establishes national licensing and registration requirements for mortgage loan originators, or MLOs. It requires MLOs to complete pre-licensing, which you probably have done or are doing or in the process of, pass a national examination, which hopefully you will, and undergo background checks and ensure consumer protections to prevent fraud in the mortgage industry. So there are 4 pillars. One is education. If you're joining the state licensed entities, then you're doing this process. If you're working for a federally chartered institution, you don't have to get this license. You are work under them. So there's like 2 NMLS numbers you can get. One has an R at the end of it, which means that you are working for a federally regulated entity. And then these state regulated entities, like a mortgage broker or a local lender or whatever, whoever has a state license, you're going to have to do all of these requirements, which means annual continuing education and pre-licensing requirements, depending on the state that you're in. If there's any additional state hours that you have to also do, pass this examination with a uniform state content. And at this point, I don't see a change going to happen. States could decide that they want to go away from that and have their own requirement in terms of the test and state requirements, but it's way easier to have a uniform state test, and we've kind of codified all of the languaging that goes across the United States, and the Conference of State Bank Supervisors has done a really good job here. So you want to just make sure that you're studying it. You definitely want to know what the fee or the penalties are. The fines, I'm going to say, excuse me, not fees, but fines associated with SAFE. And your textbooks will have these. Make sure you just review your textbooks and you should be good to go. But you definitely want to memorize what the penalties are for violating the SAFE Act. The next acronym is FHA, stands for the Federal Housing Administration. The FHA is a government agency that insures mortgage loans. That's so important. They're not a lender. They're an insurance company, basically, and they insure loans issued by approved lenders. Who are they protecting with their insurance? The lender. So the lender is being protected against default, and that's what the FHA is doing. So the FHA is defining, and again, what is insurance? Insurance is risk mitigation or risk aversion strategy, right? And so, like think about like health insurance. You have health insurance in the event you get sick, and you're hedging against the risk of illness with health insurance, right? So insurance is a risk strategy, a risk aversion strategy. Such fancy words. Aversion means to avoid something. And that's what the FHA is doing. It's making home ownership more accessible to first-time home buyers and low to moderate income borrowers. FHA typically requires lower down payments, and you want to know what the requirements are. 3.5% down for the FHA loan. You want to know what mortgage insurance premium is, MIP, and that all FHA loans have it regardless of their loan to values. Like in the conventional loan markets, 80% loan to value, 20% down, no PMI. Here, MIP exists no matter what. MIP, 3.5% down payments, and you want to know how to qualify an FHA applicant income-wise. So you want to remember the debt to income ratios, 31-43, how to figure if they qualify with their housing expense and their total debt, etc. So you want to know a little bit about the FHA for sure for this examination, and you want to know that it stands for the Federal Housing Administration. The next one is VA, stands for the Veterans Affairs, and it's the VA Loan Guarantee Program. So the VA stands for Veterans Affairs. Is a government-backed mortgage available exclusively to eligible military service members, veterans, and their surviving spouses. VA loans offer several advantages, including zero down payment. You want to know that. No private mortgage or any kind of mortgage insurance for that matter. No MI. Right, so I'll write no MI. And competitive interest rates, making homeownership more affordable for those who have served in the military. You want to know about the VA, the loan guarantee, the total debt ratio, which is 41%, and sort of what an originator can charge for a VA loan. What is max? What is eligibility? And sort of what is a certificate of value, COV, or certificate of value is CV. To figure out how to determine what the value is after an appraisal is done. Just giving you a couple of pieces that you want to remember. The next one is QM. What does QM stand for? It's the qualified mortgage. All right, so a qualified mortgage is a type of loan that meets strict lending guidelines designed to ensure that a borrower can reasonably afford their mortgage payment. QM loans prohibit risky features, that's the trigger, such as negative amortization, interest-only payments, or excessive points and fees, to reduce the likelihood of borrower defaults and financial instability. With qualified mortgage, we are verifying the consumer's ability to repay, the ATR. So the ATR rule goes hand in hand with qualified mortgages. Qualified mortgages typically cannot exceed a 43% back-end ratio. No adverse or risky loan features, and the maximum that loan originators can charge on qualified mortgages is a maximum of 3% in origination charges, total all in, including fees. So these are things that you want to know about. Bullet points. Another phrase, if you are not originating qualified mortgages, then there is something also known as the Safe Harbor rule. And all of those are probably clustered in the same general vicinity in your books and materials that you're studying, wherever you're studying your courses. The next one is the ATR, which stands for the ability to repay. And again, this goes hand in hand with the qualified mortgage that we just looked at earlier. The ATR rule requires lenders to thoroughly assess a borrower's income, employment, credit history, and debt obligations before approving a mortgage loan. This rule was implemented to prevent reckless lending practices that contribute to the 2008 financial crisis and ensures that the borrowers are only approved for loans that they can realistically afford. You want to know several points that you look to determine if somebody has the ability to repay. I believe last Wednesday, we went through a little bit of a list there. So if you actually check some of the footage from last Wednesday, you'll see sort of me breaking down. I think it was a question or all of the following were part of it except kind of things. All right, let's check out some questions. Here we go. Number one, which federal law ensures that lenders provide clear loan terms, including APR, interest rate, and payment schedules before a borrower signs a mortgage agreement? Letter A, RESPA. Letter B, TILA. Letter C, SAFE Act. Letter D, ECOA or ECOA. And the answer? Letter B, TILA, the Truth in Lending Act. Okay, so again, we want to remember that the Truth in Lending Act is implemented under Regulation Z. This is a consumer protection law. It's a massive one. Remember, together also, it and RESPA merged together and created the TRID rule. The TRID rule is the TILA-RESPA Integrated Disclosure Rule, where we have the loan estimate and the closing disclosure, definitely both things I would know for your exam. And you want to know the basic definition of what the Truth in Lending Act is, which is this. It provides, a borrower with clear loan terms, including the APR. Don't forget that the APR can stand alone in an advertisement as well. Question number 2. Which act prohibits lenders from discriminating against borrowers based on race, color, religion, national origin, sex, and marital status? So again, I'm just going to underline here, lenders from discriminating. So which one of these laws is an anti-discrimination law? That's pretty easy. So SAFE Act. Letter A. Letter B, RESPA. Letter C, HOEPA. Letter D, ECOA or the ECOA. And the answer? Letter D, ECOA. Equal Credit Opportunity Act. You definitely want to know that it sits under or implemented by Regulation B. You want to remember these protected classes. I don't say it often. There are things we do need to memorize. On this exam, there are several memorization things that we actually have to be a part of, and this is one of them. You want to know the protected classes. It could be a question like all of the following are protected classes except kind of questions. So just look out for those, and you should be good to go. Question number 3. What does the SAFE Act regulate? Letter A, the licensing and education requirements for mortgage loan originators. Letter B, the reporting of discriminatory lending practices. Letter C, the standard mortgage application process. Letter D, the rules for high-cost loans. All right, and the answer, boom, letter A, the licensing and education requirements for mortgage loan originators. So SAFE Act, the Secure and Fair Enforcement for Mortgage Licensing Act, deals with licensing. And then, the standard mortgage application process, that really doesn't have a law per se, but there are standard documents. The rules for high-cost loans are HOEPA. That was a Section 32 loan. And then the reporting of discriminatory lending practices, the reporting piece is misleading, so that's not even accurate, but the collecting of potential discriminatory information would be the HMDA law, the Home Mortgage Disclosure Act. And boom. So we are back. That was a quick rundown of some of the most popular acronyms / initialisms for the mortgage licensing examination. You will definitely see reference to these as you check your outlines. You will see these all over your outlines. They are there. So you want to know a little bit about these, kind of go back to the video and check it out, kind of think about what I talked about, of what you might want to know and what you might not. So again, there's a little bit of memorization. There's a little bit of practice here. Hopefully there's more clarity. If nothing else, I kind of hit on a couple of additional points that I'm fairly confident are important for these laws. So definitely look to these. Do not get anxious about this examination. Again, you have to just stay calm about this. You have to break it down in a way. And here's the hard part of all of these examinations. You're looking at your textbook and you're looking at this massive hundreds of pages of stuff. And then the big question is, oh my goodness, what do I have to study here? Now, the other problem with this is you're only being exposed to this for 20 hours. And so some people think, oh my God, 20 hours. And yeah, it takes 20 hours to learn a skill, but to learn an industry is not 20 hours of learning. I mean, this takes years to understand and years to really think about and digest and sort of be able to work with, right? To make it a part of your DNA is kind of hard, but that's not your job. Your job is to get to a passing score. This is a pass-fail examination. And so the passing mark you need to get to. So the harder of the parts is figuring out what to not study. And so that's where a bit of an expert comes in. The surgeon comes in and say, hey, listen, I would say forget this, this, and this, and only focus on this and this versus this. I mean, you could look at and break down the Truth in Lending Act into a ridiculous amount of little pieces. And then the idea here is, well, which of these pieces do I really need to know? And which of these pieces can I just kind of cast aside? To not get a full picture, again, mind you, I'm just trying to say it's about passing versus not, then you get into the business. But I can assure you, unless you make any of these things a part of your DNA, it becomes very hard to compete against the best in the business. The best in the business, this is a part of their DNA, and they understand how to communicate it in a way that is expressive and clear, and it's right to the point. It helps to answer the questions, and it's a sales job that really requires you to know a thing or two. In the field, you're never going to need to know all of the pieces of the Truth in Lending Act. So a lot of folks go, man, I just got to regurgitate this. And that's why it's dangerous, because if you phase out, if your mind wanders for that split second while you're in a class, then you have lost all of the ability to connect different pieces together. Now, everything that you've learned in those moments are these disparate pieces of information, and you see no interconnectivity. For example, I kind of mentioned, hey, the HOEPA law lives inside of the belly of the Truth in Lending Act. I'm going to tell you, if you were to test students across the board, they have no clue of that connective tissue. They have no clue of the connective tissues between RESPA and TILA. They have zero. So that's what happens when you're sitting there for 20 hours, 40 hours, 80 hours, hundreds of hours, when you're doing all of this stuff and you miss something. Let's not forget also that you might have a crummy teacher. Maybe the teacher sucks. And now you have a sucky teacher. You have a book of information that's completely disjointed. You have no connective tissue. You've wandered off. So now you're in that position in your pre-licensing courses where you're like, okay, I'm just going to get through these hours and then I'm going to have to study. And then what people do is they study disparate connected vocab, and then they try to memorize stuff, but they don't understand the concepts behind them. They're nervous about theory because they missed the theory, so they got confused about the theory. So now they have this stigma about theory that they can't learn theory. And then you just see folks practicing questions after questions after questions after questions. Now, that works. Some students go through pre-licensing and they take some practice exams, take the exam and pass. Some students will do the drinking through fire hose, lose it during the hours, just get through the hours and then study, practice questions, practice vocab, do their thing, and then pass. And then you have folks that are, trying to figure out how to do it, and they're failing constantly. So again, I've just illustrated that there are several pathways. Where do you sit is the question. How do you learn? And so I never guarantee ever that you're going to pass because of me. But if you look at our YouTube channel and everything else, people are passing all over the place, which is exciting and awesome. And now I know that there's still students that are failing and having a hard time. And again, I submit to you that there are different learning paths and learning abilities, so don't get stressed. You fit into these categories somewhere. Reach out to us in the comments and let us know how. Now, I had mentioned earlier that we just came out with this pretty cool solution. We're about to drop it very soon. And let me just kind of show you what this thing is. I'll pop in down here. So we've created a master class for our real estate friends. And if you're in licensing for those particular genres, your salesperson's, your broker's license, man, what I've done is taken 25 years and we've retooled everything that you need to know. And the best part is everything that you do not need to know. Again, to the information that is the highest probability, the highest value targets, the most important. Could there be things that I don't cover in this program? Absolutely. But these are the things that I know and my team knows are the highest value of things. So I've compressed all of these ridiculous hours. On average, some of our students that we see, they're spending 15,000 hours as a collective group every 28 days learning on our channel. And then, which is tough. Hey, look, this is YouTube, right? So you're scrolling, you're being influenced. The algorithm doesn't want you to pass an examination. I don't want to make the gods of YouTube angry, but they don't want to make you pass an exam. They want you to continue watching their stuff. If you even go down that rabbit hole far enough, the algorithm doesn't even want you to be a professional, productive person in society. They want you to watch YouTube constantly so that their advertisers can pay them more and more money, right? So it's just the sort of this conflicting thing. So in this world, this is off channel. And then basically it goes through everything. It goes through exactly what you need to know. So for like my real estate friends, property ownership, this is a big function of your exam. And so what I do inside of property ownership is I go deep only to the things you need to know and then reinforce that deepness with very strategic quizzes that are the 25-year accumulation of what I know to be the truth. So it is this amazing, in 6 hours, you can get through all of this. And we see success in 21 days or less many times from our students. Now, a lot of people don't know this about me, but I get sort of hired out by large corporations to hire C-level executives sometimes and management, upper level management. And these are situations where, hey, I need to pass, these are top producers potentially, or this is white glove recruiting, and we just need them to pass. And then they bring me in. I'm like the wolf in Pulp Fiction, where they have me sit with people and I sort of engineer how they learn. Take what I have, come across what I found, and then be able to help hopefully fix that problem and get them through, right? So like that's what I do. And so we last year decided to just build this awesome channel to help all kinds of folks from all different income levels and everything else. And that's something that I'm so passionate about. It's what Kate's passionate about, my partner. We love helping people. And so this is, a for-pay situation. So it's not for everybody, and it's a premium product. That's the other thing. But it comes with just what you need. It also comes with 200 of the best exam questions that you're ever going to see in the industry. And the other thing that I built here was I built an entire community. And in this community, what you can do is you can come here with like-minded people. There's tons of interesting stuff. Like a new course that I'm dropping is a 7-figure mindset. If a lot of people don't also know that I've been a professional investor. I bought my first investment property when I was 18 years old and never looked back. So I've been doing this professionally speaking. So I do practice what I preach, and this is something that I am very passionate about. Teaching just happens to be the thing that I absolutely love to do. And so I'm putting this 7-figure mindset course out, and like a quick start 30-day agent thing, the things that'll save you potentially years of information before you get in the field. And I interview some of the baddest. And I also took all of our very popular content, the highest viewed stuff, and advertisement free, no distractions, have organized it in ways that folks can do it. Tons of questions. So for the MLOs, there's going to be tons of practice questions, tons of explanations, tons of analysis, tons of the best flashcards, audio for download, everything else. And then the other thing is, the examination, mathematics and everything else, all organized. Also in my community, I go live bi-monthly where it's an Ask Me Anything. So if you're looking for something very specific, I can, help you work through that. Only available to the folks in my community. And I have global search, which kills everybody when it comes down to it. You can type in a specific topic like redlining we learned about today, and it finds the best explanations of redlining, and it's going to launch that exact spot inside of a training and show you exactly what you need to know. So it's one of those things that it is a really cool thing. I don't want to make it a huge deal, but man, I will tell you, it is awesome. It's something that I've been very proud of, and it's rare because I'm such a workaholic and bash myself majority of times when I'm trying to put together stuff. But I'm proud of this thing. This thing is going to work, and it's awesome. So if anybody's interested that's currently studying, drop in the comments. I'm interested. If you want to, reach out to us that way, and then we'll figure out a way to get your email address, or you can email us at support@relicencepro.com, and we will keep you on a list when we launch. We will absolutely add you to it. And if this is something that and I know that there's a percentage of you that are going to need this, we will absolutely be able to reach out to you and send you how to register and check out for this, and you should be good to go. All right. So thank you very much for hanging with me. I hope the time we spent together yields you some success. Good luck with your studies, and good luck on your tests. It was a pleasure to work through these acronyms with you. Good luck, and let us know if there's anything else we can do for you. It is an absolute pleasure and privilege to be able to work with you. Thank you for subscribing to the channel, and we will see you on Monday, for the exam breakdown for real estate professionals, and then again next Wednesday for you mortgage loan originators. We'll see you then.